Hello, it's Darin Eppich. Welcome back to my YouTube channel. Today we're going to go into 3 housing market predictions for the rest of 2022. Definitely noticed a slight change in the marketplace. Things are still moving, it's still a seller's market, but there are some things that people are wondering about. So I'm going to give you kind of like 3 major housing market predictions that I'm seeing for 2022. And then I'm also going to go into kind of like, a little more depth about what I foresee happening and other things that are going on outside of these 3 housing market predictions. If you like the video you see today, please like my video. If you haven't subscribed yet, please subscribe. Buying a house is a major purchase, and we are definitely seeing still a lot of really, big activity, big listings, big purchases. Still not a frenzy, but it's definitely busy. So here we go. We're going to talk about the 3 housing market predictions to kind of take us into the second half of 2022 and moving forward. Number 1, which should be no surprise. It's something that is going to continue to happen this year, is mortgage interest rates. They're going to remain high compared to what we saw the last couple of years when we were in the 2 and 3s. Right now we're at about 5.3% on a 30-year fixed. We don't expect them to go down anytime this year. So for those of you that think they are, or think, we also, I am also reading some things that people think that they might go up a little bit more. I don't know if it's gonna be that much more drastic though. I'm getting kind of conflicted viewpoints on it. I hear as high as 6.5%. That's the highest I hear for 30-year fixed. Right now we're in the 5.3%. So there's supposed to be more Fed hikes, but that doesn't necessarily mean that interest rates are going to go up right away or dramatically. So this is something that you can expect for the rest of 2022. Interest rates will be high. So far, because of the interest rate hikes, with the price points in Los Angeles, we have seen some buyers be priced out, or they may have to go back to the drawing board and look at condos or look at different areas to purchase their first property. I think buyers need to, use this information and be less picky. There will be an opportunity for refinancing, I'm told, by a lot of lenders, probably spring of next year, maybe even a year from now. I hear even rumblings that it could be down to the low 3s or, mid 3s. So there'll be a chance to get your mortgage payment down. So I think don't worry. If a recession does hit, mortgage rates usually go down anyways, but right now we're trying to counter inflation. Everyone knows about the inflation situation. That's such a topic around the water cooler or wherever you're at, or the coffee shop. But with the mortgage rates the way they are and why they keep going up, most buyers aren't having as big of a budget. And the reason why you've seen a lot of people kind of pull out for now, or shift gears, or change their mind, is because they look at that monthly payment. So now they're reducing their budgets because it costs a lot more monthly. That's the number that people usually look at. They are always wondering what their monthly nut is. They don't look at the overall purchase price. They focus on the monthly number. It's just the way it is for a lot of people. But so it's made some people change. With these rates also, you may notice that luxury, like $5 million to $6 million and above, may get not as competitive. That also may squeeze people down into lower price points, so it may ripple effect as well certain price points in the more entry level of Los Angeles housing market again. So right now, if rates keep going the way they are, and homes are supposed to keep appreciating, I'll talk about that here in a little bit. But you might notice that the lower price points might get more competitive again because people are shifted down. So these are some of the predictions. This is the one prediction. Mortgage interest rates are going to remain high. Historically, they're low, but it will remain high. But there could be refi opportunities later. And quite honestly, compared to the last 30 years, it's actually really low. I know a number of people that say they remember when it was 8%, 12%, 13%. Granted, housing prices were less then, but still in terms of cost, for financing, it's relatively low. Number 2, housing market prediction, more inventory. It's not gonna be like a light switch just went on and all of a sudden we have all this inventory. From March in LA to April, we did increase like 10% from 5,500 to almost 6,000 houses available in inventory. We're running at about a 2-month supply. To get to a level market, it needs to be, closer to between 4 and 6 months supply. So we're definitely still a seller's market. That is not going to change. Some people believe that some experts predict that there might be a possibility that we could go to pre-pandemic levels in the near future, but I don't know if it's going to happen this year, maybe next year, because, with interest rates, there's been less people. There's still buyer demand like crazy, but there's less applications for loans. So that's a factor. Inventory, there's people just, for whatever reason, they don't want to sell. A lot of it's because they think they'll still get appreciation. Some of them just go, what am I going to do? I'm going to have to go in this marketplace and try to fend with other buyers to find a property or upgrade or downgrade and go in that competitive marketplace that we're in right now. So that is a lot of reason why you're not seeing more people sell. I think a lot of people to sell right now and to increase this inventory, they have to be leaving the state or have to have a really, important reason. You're just not seeing, it's spring, summer. We were supposed to already get a lot more inventory. I would say we're still, like I said, 2-month supply, we're really low. Still historic lows or, close to record lows. So we're still a lot less than a year ago. I think a year ago we were over 7,000. So we'll see how the summer shapes out. These next couple months are going to be really interesting to show us what's going to happen. The more inventory we get also, the more level of a market we'll get. So home values won't increase as much. And we're expected to get more inventory. But right now, like I said, it's not a light switch turning on. We're not seeing the inventory increase that we thought we were going to. For whatever reason, people are just sitting their butts in there and they're not leaving. They're not moving, they're not selling. I think, there's been some people that are doing it to cash out. I've seen some people that go, I'm going to rent for a little bit. And that's kind of wild because rental prices are really high. Landlords are greedy and they're not, they don't have to be regulated really. Unless it's a property that's, rent controlled, but, they can charge whatever they want for market rent, on certain properties, the newer ones, they can make up their own prices. And with low inventory in that regards, it's kind of shifted over to rentals as well. So you're damned if you do, damned if you don't. And I know a lot of buyers also that are looking to get back in the marketplace because rents are so high. So they're like, we might as well put it towards a mortgage. So like I said, inventory is 2-month supply. We're hoping we'll get more. It's spring, summer already. We're in the peak selling season in Los Angeles and a lot of the country. And we're still seeing really low inventory. So we'll see how that shapes up. That will impact significantly the amount of inventory to buyer demand. Economies of scale will show us where the housing prices or values will go. And inventory plays a huge factor right now. Number 3, home values, home prices will keep going up. But the good news is a lot of experts, CoreLogic, Fannie Mae, they do predict that the growth will slow down. That doesn't mean it's going to go flat. I keep telling people conservatively, the rest of the year, we're looking at 9% appreciation. I've seen Zillow and some experts on some boards predict that we're going to be in the 15 to 17% range, which is bonkers because it's gone up, 35% in the last 2 years since the pandemic, if not more, depending on what area in LA or in the country. So the idea that we're still looking at conservatively 9% appreciation this year, long story short is, if you're looking to buy, even though rates are higher than they were a year ago, you're still going to gain on $1 million property. I just had this call with a group of 165 people with my lender. We were talking about how you may pay, let's say this year, $12,000 more in mortgage payment in LA for $1 million property, let's say, give you a round number. But if the house appreciates $90,000 to $100,000, and then you're gonna have a chance later to refinance, when interest rates go back down after we've countered inflation, doesn't the interest rates if you can afford it, it's still worth it? Because rates are still really low. If the appreciation is still gonna be there, I really do think you should really look at it. So that's one thing that all experts still predict. Home values are still gonna go up. Maybe not at the crazy pace they were going, which I think last year might have been 20% Some places 25% I heard. So we're looking at 9 to 15%. You know, I even saw one expert say 17%, which I don't consider that slower growth. I consider that just still really great growth, appreciation in home values. But for buyers, that is great news. Maybe not as much competition on every single home. Maybe not as, maybe won't pay so much, 3 months from now as you did, would pay now. So there is going to be some opportunities present themselves. We're not in a level market. We're still in a seller's market. But, for buyers, you're not going to hit 20 offers. I'm not hearing these crazy numbers like we did in Q1. So we're definitely I'm not seeing or hearing of like the, 30, 40 something offer situation I was in earlier this year. 25 offer situation I was in earlier this year. You're starting to see them get down to, the 5 to 10 offers, which, even a couple years ago was pretty normal. So it's starting to kind of normalize for LA. It's always going to be a competitive market, but that's what's going on. Home prices will still continue to go up. The good thing is about real estate, for a lot of people that are looking to put their money somewhere, I will say, I just had the conversation yesterday with a finance person. She lost a lot of money in the stock market. She asked me, how's the real estate market? I said, we're still expecting I'm saying conservatively 9% appreciation this year, maybe more, even with interest rates, etc. You're seeing, some buyers get pushed out, or some buyers holding, or some buyers waiting. But the people that are still buying, you're still seeing a lot of investors buy. You're still seeing people buy high price points. There must be a reason why, because they believe that home values and they know real estate will continue to appreciate. So it's still a good buy. And if you're looking a place to put your money, I think real estate's a lot better than the stock market right now, because we don't know what the bottom is for the stock market yet. That's my 2 cents on the 3 housing market predictions. There's no signs of it slowing. I do, my 2 cents, what I've noticed the last month and a half is some buyers are taking, timeouts, or they're, restructuring their thought process, or, taking a step back to figure out what their next game plan is going to be. But also see a number of people still looking to buy, and you still have a lot of people gobbling up properties. So I think the longer you wait, even in this marketplace, even though it's not going to be as crazy as Q1 or as 2021, I think my recommendation to a lot of buyers would be to, if you're wanting to buy property, you're going to pay less now overall and gain appreciation instead of waiting. And for the sellers, while it's still a seller's market, I would definitely encourage people to sell, but that's up to them. Some people, you have to figure out what you're going to do. But I like to focus more on buyers because that's what I work more with. I think buyers really need to take into consideration that you wait another year, it's going to be 10% more probably, if not more. If you buy now, you can refi it later. So that'll give you the opportunity to save the money later. So you're not, on the hook for, a higher interest rate. But, like I said, I don't have a crystal ball. This is what everyone's saying. These are what experts are predicting. These are the 3 housing market predictions. Mortgage rates are going to remain high. Inventory is going to, gradually increase, but I don't think anything major this year. Number 3, home prices are continuing to increase. The growth will slow, but you're still looking at probably 9% minimum appreciation or home value increase this year, the rest of the year. If you have any more questions about what will happen when we hit the recession, which could happen this year, but it's probably more likely to happen next year. I have a whole conversation on recession and what historics have done. You might be quite surprised. You can contact me or comment below. If you like the video you saw today, please like my video. If you haven't subscribed yet, please subscribe. I do a new video every week, Saturday at 2 o'clock Pacific Standard Time. I'm based in Los Angeles. I'm with Sotheby's. My name is Darin Eppich. Have a wonderful day. Thank you so much for coming by. Thank you.